Stocks into the day down. We've got some earnings to get through this afternoon. Some fun names. Expedia. We got Yelp. We got Lyft. And maybe if PayPal hits early, we'll talk about it. But that's expected to be on the Late Show. I've got Renita Young here with me in the studio and Kevin Green live on cam. Afternoon, guys. Good to have you both. All right, we're slowing down a little bit in earnings, but we got some stuff that deserves some attention here. To me, Renita, Expedia is one of the most ridiculous head scratchers of the market the last 3 years, because they made an all-time high a year ago, like in the middle of COVID, before we were really reopening in earnest. So now I don't know what to think about this company. Shares are down. They did miss the estimate, it looks like.
They did. They missed the estimate of $1.65 for earnings per share. They came in at $1.26. And Expedia's fourth quarter, the fourth quarter net revenue was $177 million. And then fourth quarter adjusted earnings per share, just as I said, they were under those expectations. So I guess last year it didn't do as well as people might have thought.
Yeah.
I think that
rough end of the year.
It was a rough end of the year. And so you mentioned, though, it was more like a record for the full year, which is absolutely correct for the full year, but fourth quarter not as well. Bookings and lodging revenue is something to look at as well with this stock. And it was projected to report revenue of $2.69 billion. Let's see where revenue came in. It came in at $2.62 billion, so just a hair below what was expected.
They're talking about reducing some of their debt, which is important. They said they reduced debt by $2.2 billion as free cash flow grew to just shy of $3 billion, which is a huge increase compared to 2019. So those are very good fundamental things that the market wants to see. However, I do wonder that when we see ailing signs of advertising, with the exception of Duran Gerstel at Ameritrade Network, we talked at the top of the show, it seems like everything else generally has shown slowing, and that's a big part of this business, right, Kevin? I mean, yeah, they connect the bookings and it's a great service for us, but they got to sell ads along the way too, or is that more like a TripAdvisor domain?
No, obviously they do still need to sell ads here, Oliver, but they do have a little bit of an asterisk. They are calling out some of the severe weather was actually impacting some of these earnings, and actually demand was fairly strong here. And you can actually look at that from the United States. That came in at 74.6 million. The estimate was 75.1 million. So that came in a little bit shy here. So I think there's going to be a little bit of an explanation when it comes to this stock. And here's the only reason why I say that. If you look at some of the other hotel stocks that are out there that also, advertise on Expedia, they're actually doing really well. They're seeing bookings going through the roof, and they can't hire enough people to be able to staff their rooms. So there is definitely a disconnect here when it comes to some of the end users and some of the customers that they support compared to what they just reported here. I'm just curious to see how much of the storm demand, the storm impact actually impacted the earnings. I'm sure that they're going to have that conversation here on the call, which is maybe a reason why we are seeing a little bit of a bounce from the low that it just had here when it came to when it comes to trading. But overall, I mean, it is a little bit of a head scratcher, because all of the other end users, all the other components when it comes to travel is showing very good strength, except for this stock. It might be because of these storms. I'm going to give it the benefit of the doubt until we hear a little bit more of an explanation as to what that damage was, and if that is going to be a pull forward type of number here for this quarter.
Okay. Yeah, to put that out there, they're going to have to give some more specifics on that for sure. They say demand was strong. Okay. The EPS missing also lines up with the decline in operating income on a year-over-year basis. Pretty rough stuff for the bottom line. The top line's not the problem. The room nights, the bookings, all that's up, but operating income down 20%. That's the problem.
And another thing, too, which who knows which way this impacted everything, but the company was able to do $500 million in share repurchases for the full year. So that had to make an impact somewhere.
Yeah, absolutely. Okay. Shares are down. And we'll see how the market responds in the morning. But again, with Expedia having made highs a year ago, it's like, well, how do they, if they made highs during COVID, then how do they make highs post-COVID? I mean, like, to me, it's like backwards. So I don't know what to make of the stock at this point. Let's talk Yelp, Kevin Green, where an ailing company for many years has actually found a degree of stability in the last few. What's happening here? Shares are up in the aftermarket. Is this company finally like hitting its stride, or what? What happened?
Maybe. I mean, honestly, I keep forgetting that Yelp even exists anymore, Oliver, here.
Me
but
too.
When we are seeing some of the when we are seeing the earnings, they actually did top estimates here. It looks like revenue came in at 309.1 million. If I'm looking at my number here for the revenue estimate, that was at 306.53 million. And when we look at earnings per share, they're coming in at 28 cents. I'm not sure if that's adjusted or not. The earnings per share estimate was at 31 cents, but I also have to put an asterisk there. There was actually a pretty wide range when it came to the estimate here, Oliver, for the bottom line for Yelp. So it's been a little bit difficult for even analysts to be able to see where this company is going to project at this point in time. But it does look like it beat at least on the top line at this point. So I think that's a good win for them, and maybe they are seeing a little bit of a bottom for their business.
Okay, seems like profitability, turning that corner and staying there, where it seemed like a couple years ago that Google might be running them out of town. Now I guess Google's the one getting run out of town by ChatGPT.
Ooh, that was low. Low blow. But you know where this company did win, even though ad revenue was softer. And so Google, Alphabet, as well as Meta, YouTube, and other companies had softer ad revenue, and they recorded declines in their ad revenue. And even though it has been a softer ad revenue environment, because companies have been pulling back their ad spend, Yelp managed to still get pretty high revenues.
I mean, hey, if they're standing out, I guess there's a little reopen element, because if there's one thing Yelp is still generally known for, right, it's restaurants and like specifics. They've got all the photos you go through. There's like a whole design page. Still, I think you're probably getting more like specific reviews per store, per restaurant on Yelp than you do through a Google result. But
Probably.
I don't know, I have a Google phone, so it's pretty easy. It's just got all the restaurants right there. So I do think that maybe there's still some existential threat maybe for this company. But the fundamentals don't maybe look like it. Kevin, is that the idea here, as long as they're making money now?
Well, they are making money. Well, one of the things that has been a bright spot for them is not so much the goods or restaurants, Oliver. It's been the services. It's really been the home improvement jobs, things of that nature is actually what's been driving a lot of that revenue, especially when you look at last quarter. So I think that's also continuing to sustain itself, and that also matches up with some of the earnings that we've seen already this year as well. Some of the services or leisure side of the economy continues to be fairly strong, and that's really where they're shining. It also looks like they guided for full year revenue that was actually above the street's estimate. They're guiding between 1.29 and 1.31 billion. The street was looking for 1.28 billion. So that's also a bright spot. If you can guide up compared to a lot of these companies that are guiding down, that's also going to give you a leg up, especially if you're an investor. That provides you a little bit more confidence in the stock.
All right. Great stuff, guys. Appreciate it. Renita Young, Kevin Green.